Thank you, everyone. My name is Rossi. I'm Eastern Canada Sales for NCM, VP Eastern Canada Sales for NCM. Today we have Phil Diario, our lead PM for the Core America and the Core Global Fund. Today we're going to focus on global markets. Phil, thank you very much for spending the time and taking the time with us.
Thank you for having me.
You're very welcome. So we'll go right into the first question. So the first question I received: the US market seems to be getting a little frothy, and the consistent devaluation of the US dollar is traditional during a global synchronized growth. Have you made any recent tweaks to the portfolio to take advantage or maybe defend against these for the upcoming months?
Yeah, I mean, the market has been on a tear since March, and there's definitely some froth in this market as I see it today. And it's the FANGs that seem to get all the attention, but there's another group of stocks out there that are looking even more frothy to me. And these names, some of them are well known, whether it's Spotify, Shopify, Zoom, Tesla. A lot of these names have gone up materially this year, and some of them, aren't making any money, or others aren't generating any positive free cash flow. So, there's a bit of a question mark. And it's not that I don't like these companies. Some of them might end up being the next Amazon, but it's really the valuations where I have a concern. A lot of these companies trade at PE ratios of 200 to 1,000 times earnings. So a great company does not always make a great stock. And the best example I can give is Cisco. If you had bought Cisco Systems, which is still a big company today, and it was a real blue chip back then, you'd still be in a loss position today, 20 years later. So the price that you pay does matter. And as I was saying, a great company doesn't make a great stock. So with that, what we've been doing recently is peeling back some of our technology holdings. The charts for most of the big names in this sector have gone almost parabolic recently. And so it seemed like the prudent thing for us to take some chips off the table and reduce our exposure to the technology sector.
That's great. That's a great question answer. Thank you, Phil. Second question: the Core Global is now offered as an ETF. Ticker is going to be NCG. We are excited to offer this new product to the advisors, ETF version of our Core Global. Phil, as all this new money starts rolling in, do you have any sectors or geographic areas you're going to be focusing on?
Yeah, sure. So in terms of the sectors, technology and healthcare have been my favorite sectors for quite some time. And, the way I like to invest is with a long-term horizon. So when I look out over the next 3 to 5 years, I still believe that technology and healthcare will be two of the better performing sectors. And with technology, you just have a lot of secular trends that are in place that are going to drive growth for many years to come. And with what's happened with COVID, some of these trends have actually been accelerated. Whether that's the cloud, whether that's e-commerce or the digital economy, trends that were already very strong have actually become even stronger. So it's a real tailwind for the technology sector. In terms of healthcare, aging demographics around the world is one of the key drivers there behind the investment thesis. As people get older, they consume more healthcare services and goods. Not only are people getting older, but they're also living longer. So I think that's going to be a real tailwind. And as I mentioned with technology, COVID's actually been a pretty big boost for some of the healthcare companies that we own. First, because we own companies that make these diagnostic kits. Diagnostics are a very big help in the fight against COVID. And then secondly, we own some life science and tool companies that provide all of the tools and instruments to all those biotech and pharmaceutical companies that are trying to find a vaccine. So those are the two sectors that I still continue to like for the long term. In terms of geographies, I'm kind of agnostic there. What I really want to do is own the best companies in the world. And whether they're headquartered in the US or in Europe or in Asia, doesn't really matter to me. I just want to invest in the best companies as long as I can buy them at a reasonable price.
That's great. Thank you, Phil. So last question in closing. I think you touched on it. It's been a strange year for all of us. What's keeping you up at night, or are you sleeping soundly?
Well, generally speaking, I'm sleeping fairly well. There's always something in the market that nags at me, and I'd say right now there's a couple of things. First and foremost, COVID is not over by any means, and I think right now, the kids are getting ready to go back to school. So, in the back of my mind, and I'm sure in the back of a lot of people's minds, there's this concern that we could have a second wave of the virus. So I guess we'll know more once the kids have been back at school for a few weeks. And then the second thing is that the market has gone almost straight up since the bottom of the market back in March. It's been on a real tear, and as we know, when you look back in history, markets never go up in a straight line. So in the back of my mind, it's been a few weeks, probably even longer than that, that I've felt that we're overdue for some sort of a correction. Who knows? Maybe today is the beginning of that correction, and it's really an opportunity to try and take advantage of companies that will get thrown out during this correction. So I'm going to be ready and prepared, looking for opportunities.
That's great. Well, Phil, thank you very much for your time. Thanks for everyone for listening in. If you have any questions, feel free to contact your NCM wholesaler or contact us by visiting our website at www.ncminvestments.com. Thank you.
Thank you very much.